All eyes on IT major Infosys quarterly earnings, and the numbers are on your screen at present. Absolutely after the market hours, just after the market hours, the company has posted the numbers, and on the face of it, if you see dollar revenue, it has seen signs of an upsurge. The consolidated revenue has been up with around 3%. Talking about the numbers, 40,925 crore to 42,279 crore on the consolidated revenue front. Talking about the profit figure, the expectations from ET now was around 6,810 crore for Infosys profit figure, with the number which has come up is 6,921 crore. So over there also it is above the expectation which we were anticipating. Talking about the dollar revenue is $4,941 million. From $4,876 million at present. The margins have also seen an uptick from 21. The margins in fact have seen a slight downsurge from 21% to 20.8%. So you can say that the margins are intact at 21% levels. Remember, Infosys is the last among the IT company that is a part of the Nifty 50 index to report its earnings, and with this the larger IT players have come up with the earnings. Lot of expectations from the IT majors, but then since TCS numbers, the sentiments did come down because of the weak set which it did post, after which we had HCL Technologies, Tech Mahindra, and of course we also have a lot of mid-cap IT companies which are slated to post its numbers. The larger IT players and the Nifty 50 category IT stocks. With Infosys, we end those numbers. So right now, to talk more on the results for Infosys, we have Sandip Agarwal with us. Sandip, thank you so much for giving your time to ET Now. And yes, the larger IT major and the earnings, we can say that we have completed all of those IT earnings in the Nifty 50 category at least. After TCS numbers, there was a dent in the sentiment for IT players, but after Infosys, as we clearly see, the dollar revenue has seen an up move. The revenue front is up around 3%. Of course, there is a stagnant move in the margins front, and profit figure is something which is above our expectation at least. What's your first take on the results?
No, hi, good evening, and thanks for having me on the show. So, prima facie numbers both on revenue and margins are looking slightly better than what we have anticipated. But the key risk is that, the guidance is 1 to 3. And that is where I think the challenge is, because for FY26, as we were speaking also, that India is a first half driven sector in IT, and the second half, because of less number of days in December and March, you cannot expect much. So that is exactly what is reflecting in the guidance. So I think, from guidance perspective, despite good numbers, everyone is talking about similar number for the full year FY26. So some Infosys has done good numbers this quarter, but the full year guidance is very muted. And TCS has not done first quarter good numbers, but their guidance indirectly represents similar kind of growth for the full year. So I think all the large caps will be in this range of 2 to 5% kind of growth when they end. And I think from that perspective, the multiples which they are trading are not cheap. So I think that is the best way to look at the results.
A decent set, as one can say, barring the profit figure, because the profit figure has seen a dent from 7,033 crores to 6,921 crore. Of course, our expectation was 6,810 crore, which is the profit figure is above our expectation. But if you check on a quarter-on-quarter basis, it's actually a miss from 7,033 crore to 6,921 crore. So on the profit front, we see a concern. Margins are intact at 21%. The consolidated revenue has seen an upsurge, and the dollar revenue also has seen an upsurge. The key monitorables which one needs to keep an eye on, Sandeep, a few of the key monitorables which we were discussing and talking about for all the IT majors for that matter is the BFSI segment performance. At the same time, the deal pipeline and Gen AI impact on these companies, particularly the digital segments and the IT segment, as well as discretionary spend outlook, headcount and attrition trends. What do you think is a key concern which is not helping the IT sector? Because the technology heavy index in the US NASDAQ is doing positive rounds in a few of the trading sessions, but the domestic IT players are still showing signs of negativity.
No, so the only concern is that, this agentic AI and Gen AI, the problem is they have dented the effort substantially. Now, even if you increase the pricing or realization a bit, it cannot cover for the amount of effort which has gone down. So I think that is the real challenge the industry is facing. And I think by the time Indian IT companies are able to have majority of their revenues from this new technology, it will be 6 to 8 quarters. And that's the reason I think next 2 years will be quite challenging from growth perspective for the large names. The advantage with mid and small is that, they are small in size, so their proportions can change much faster than the large ones. But again, there the multiples are even much higher than the large cap. So I think, this sector is bound to go through some time correction unless, there is again a risk of environment and people want to shift to defensive. Otherwise, right now, the situation as it is, it looks like, all the stocks are trading at quite expensive valuations given next 1 or 2 year outlook.
The feeling which we get on the face of it while we talk about the IT majors, the expensive valuation, but the expectations always are about the stable deal win scenarios. Weakness in discretionary IT spend, especially in manufacturing and retail, is another pocket or parameter which one needs to consider. You see the scorecard of Infosys earnings. Revenue is above our estimate. The EBIT margin is in line. The margins are in line, and at the same time, if you see the profit figure, it is above our estimate, but it has seen a downtrend from the previous quarter, if you see, and at the same time the margins for that matter are absolutely flat. It was 21% last and it is 21%, 20.8% to be precise during this quarter at the same time. Having said so, a few expectations over here where the margin guidance, if it stays unchanged, and at the same time, while we were talking about the BFSI segment performance, another thing which is a deal pipeline. Sandip, want to understand from you how Gen AI is influencing new deals for these IT companies, and at the same time, what's your take on the deal pipelines for the same?
No, so deal pipeline, as of now, what is happening is deal pipeline is not showing sign of major weakness, to be honest, in across the board, all the results we have seen. The only challenge is that this deal pipeline, when it will get executed, those timelines we don't have. So what is happening is most of the companies do report the new deals, but the timelines when this will get executed, that we don't know. So the challenge is that, in this kind of uncertain environment and when there is so much of dent happening on the effort side, the problem is that this pipeline could look strong, but its period could be much higher and it can start little later. And that is the reason most of these companies, if you see whoever is giving guidance, they are very, very cautiously guiding for growth. So that is what the real challenge is. And deal pipeline, earlier what used to happen, we knew that, if this is system integration deal, this is the AMC deal, maintenance deal, what will be the tenure, and we can calculate the annual revenue, what can come from there. Now it has become very, very difficult to calculate because we don't have the tenure data, and because of that, the challenge is that when will the growth come, it is very hard to predict. So deal pipeline is little misleading for some time now, and I think the clarity on that is very difficult to gauge because there are multiple projects running and sizes are very small.
Question, Sandip. The larger IT players versus the mid-cap IT players. What's your take whether to go with any of those, the larger IT majors or mid-cap, or to stay away and keep this pocket in watch list altogether, the entire sector?
So I think the sector should be kept in watch list for some time, at least till, we see some uptick in growth, because right now the PEG ratios are running between 4 to 8 times, and at 4 to 8 times it will be very hard to make money. So I think this sector has to undergo some time correction, and it is best to, wait and watch, and maybe after 6 to 9 months you can start reevaluating again. Either the stocks will come down a little bit or you have some new data. Because see, we are a first half driven country in IT sector, that is clear. So the first half is almost gone now. So second half will be weak anyway. So whatever happens will happen next year first half. So the best time to reassess will be maybe February, March, when you will also get data on the new budgets which the clients have fixed.
Okay, Sandip, on that note, thank you so much for giving your time and helping us analyze and decode the earnings, Infosys, and your views overall on the IT sector. Thank you so much. Have a nice day to you. So that's Infosys Q1 results. You see the scorecard in front of you. Revenues are above our estimate, and at the same time consider this the last among the IT company that is the part of Nifty 50. With this, the larger IT players, they have all disclosed their quarterly earnings, TCS, Infosys, and at the same time there are mid-cap companies which will still be posting the numbers. But all in all, the take or the stance from the experts is to keep an eye on the IT sector and park it for now. Keep it in watch list. On that note, we slip into a short break, but there's a lot on the other side. You stay tuned with ET Now.